Amazing. Well, good afternoon and good morning to those who are joining us from the West Coast. My name is Sherrell Dorsey, here with Impact Alpha, contributing editor. And this is a special conversation for Plugged In. And we have the privilege of having an incredible and very wide conversation on this topic of braided and blended finance. And to join in the effort of having this conversation much more broadly is Taj Eldridge, who you all probably know just broadly across the Impact Alpha ecosystem. And we had a conversation actually around this time last year, Taj. I don't remember if you remember that episode that we did.
Absolutely. Absolutely.
Absolutely amazing. And so as you all are coming in, excited to introduce you to our experts during this particular session, Edward Jean Lewis, as well as Dr. Reginald Park, excuse me, Dr. Reginald Parker. And I'm going to let you two just take the floor and share a bit more about your respective firms and experiences, and then we're going to go ahead and just dive in. Okay, so maybe let's start with you, Edward, and then we'll move on to you, Dr. Parker.
For sure. Thank you for that. It's a pleasure to be here with everybody. My name is Edward Jean-Louis. I'm an investor and operator. Started my career in asset management and started a venture firm called Tail Venture Partners in 2017, focused on climate tech, deep tech, and SaaS. Made a number of investments across the US and more recently have launched a platform called Monte to focus on a number of catalytic investments across the diaspora, primarily in the US, Caribbean, and Africa, and really centered around how do we take ideas from zero to one. And this conversation is really salient to that, and I'm happy to be here. So thank you for having me and looking forward to the conversation.
Thank you so much, Edward. And Dr. Parker, well, I'll call you Reginald. Do you prefer Dr. Parker? Once someone has a DR in front of there, I'm like, doctor, let me
Well,
honor
we're
you.
friends and we're family, so you can call me Reggie.
Okay, all right, Reggie, take it away for us.
All right. So, look, I started out as a technologist. Then I moved into private equity and doing projects. And then I became a green banker. So I do a little bit of cross. So my point of view is very interested in terms of braided capital from not only a climate tech enterprise platform, but also building projects. All of them use braided capital and how you think about that. And, I would like to, share that with everyone.
Amazing. Taj and I spoke a few weeks ago. Taj has been all around the world. And Taj, I'll let you also kind of maybe just give us an update since we do know you here in the Impact Alpha family. But really wanting to have this conversation on alternative financing methods and particularly models for this industry within the climate space because it does require a very different kind of slower capital, right, or creative capital. And so, so Taj, I would love for you to kind of give us a bit more of a preamble that really kind of harnesses the conversations that are happening within the finance community around blended and braided capital. And then we can get into a little bit more of the conversation. For those who are also joining us, feel free, yes, I think April mentioned here, feel free to drop your name and org into the chat and even your LinkedIn so we can all stay connected here. And if you have questions as well, feel free to drop them in the chat or at the bottom of the screen is the Q&A button. And so we'll try to also get to some questions as well. But Taj, we'll love for you to kind of give us a pull this in for us a bit more.
Great. Thank you, Sherelle. If people notice, I try to get with this call, so many people who also wear many different hats in this space, not only myself, but Sherelle, Reggie, and Ed. And so I think the conversation we've been having around here is the fact that funding is changing for founders, especially founders in the green tech space. One of the things I've been talking about for the last couple of years is that how the green tech space also influenced the workforce space, because in order for these jobs to be created, the literal jobs of the future around green tech, you need to have the funding and financing behind them as well. So this conversation that Sherelle and I had kind of came from a project we've been working on within JFF, jobsforthefuture.org, that's been focused on this idea of braided finance and blended finance of having capital allocators. The key is to bring together corporate venture capital, foundations, CDFIs, green banks like Dr. Parker, private equity, venture capital, like the stuff that Ed Jean-Louis is doing, debt partners such as Enduring Planet and many others to have these conversations at the table and actively really partner to give the funding that's needed to these founders and the startups to make them scale and then ultimately provide impact by employing and providing those products and services that are needed. So I'm really excited about this conversation. I'm really excited about the future. And if you're in the chat or you're listening to this and you have some interest in braided finance or blended finance, and we'd love to talk more. But today I want to get some of the experts, Reggie and Edward, to really talk a lot about their vantage points as both founders, operators, and financiers as well.
So I want to go ahead and kick off the first question here, and thank you again, Taj, for just more of a higher level understanding of what we want to take away this afternoon together. Edward, so mid-stage green energy companies, especially in the hard tech space, are hitting this valley of death, primarily because of long deployment cycles and high capital intensity, which are, very, very tough for just pure VC, right? Which is why these other models are needed. Now, in your perspective as a VC, as a private equity investor, how does braided capital specifically act as this like way to de-risk some of these investments? And could you, provide an example of how maybe like a grant or what, the industry is starting to call patient capital can make, like a $10 million check into a green energy startup so much more palatable for financial return?
Yeah, absolutely. When we first started doing our work at Tail in 2017, we kind of bumped our heads and we started in climate tech. We wanted to start it with deep tech. We thought to really have an impact, right? We didn't want to just back founders that were sort of doing something that was already out there, right? And having marginal improvement. And so we naturally gravitated to hard physical products, and we bumped our heads a lot and realized that a 25K check at pre-seed or a 100K check at seed or even a 250K check at the Series A level isn't going to get it done, right? Especially for people who are um, we like to all think that we're ambitious, right? And so if you're backing people with grand vision and grand ambition, right, they're probably doing something that's very hard, very difficult, and likely hasn't been done before, right? And so there's two things two learnings that I learned, and now have scar tissue to prove that I've learned them, right? Is one is whatever the timeline is for development, add some time, right? So if you're talking to founders, or if you're a founder and you're thinking, hey, I want to build something, right? And it's going to take me 4 years to get to market, right? Uh, you might want to add some time, even if it's just for margin of error, right? One of the things that we learned really early on, and what I've learned since then, is that it typically takes the market time to catch up with what you're building, right? So if you're truly building something that does not exist, that's truly transformational, that's truly going to be enduring, you're probably going to have to convince a lot of people that, hey, this is needed in the world. And then two, it likely is going to take a lot of development time to perfect and find product market fit. And so that's the one end of the spectrum. The other end of the spectrum, which this conversation will center a lot around, is whatever whatever the plan is financially or operationally on the budget side, you might want to also extend that, right? So if you're planning, hey, I only need $5 million to get to commercial viability. One, commercial viability means a lot of different things to a lot of different people, but two, if I was a betting person, I would bet that it's probably going to take you a lot more money to get to that point, right? And so that's something that we experienced really, really early on, and it actually forced us to be creative, right? And so working hand in hand with founders, this is one of the reasons why I love venture capital, is that if you're doing it right, you're usually in the trenches and you're working with founders and trying to figure out, all right, how can I bring to bear my network, my capital, my resources, my ideas to founders who are trying to make something happen. And so we've had the fortune, and I've had the pleasure of working with and sitting on the board of a couple of climate tech founders that were building in the hardware space. And one of the things that we realized was just relying on private capital is pretty challenging. Today, the good news is there's I want to say this resurgence or this gravitation to backing founders that are building in hardware, right? So there was this movement that software is eating the world, and software is still where AI is making sure that still reigns true. But there is this realization that hardware and physical products are quite necessary, right? And so one, the good news is that there is energy around that, but I still think that the two points that I mentioned are incredibly salient and important to think about as you're building your company. And one of the things that we saw was getting creative, right? And so going after foundations that might be mission aligned, right? Or going after customers, right? Who don't have the time or I shouldn't say resources, but don't have the time or the team to tackle things internally, but see where the future is going, agree with your vision, right? And might be interested in working with you on a pilot to help you actually fund and commercialize the product, and then end up actually also being a commercial user of this product. So there are a number of different ways that I think that this can be achieved. But I think being creative and realizing that, hey, if you're truly building something transformational and building in this physical space, thinking outside the box and using ingenuity is going to be paramount to achieve your goals.
Can I just do a really quick follow-up before you jump in, Tosh?
Absolutely.
So, one of the conversations I'm having, particularly with climate tech founders, is yes, there's much more emphasis on the hard tech, and I think very specific niche industries, whether we're thinking ocean or clean energy, green energy, whatever it is that you want to call it. And though there's this interest, getting to the funding is still quite a challenge. And because it's such a niche space, a niche industry, you could still spin your wheels with, connecting with VCs, but still not knowing who is deploying at the rate in which you need to be able to access in order to keep, cash flow happening, right? So I'm curious for you, Edward, and maybe conversations you're having with founders, maybe even those here who are capital deployers. How are you making yourself visible and available, to founders, as a resource? Because at the end of the day, when you're on the other side of that table, you're trying to survive. And every second you waste with a VC who's not interested or misaligned, it takes away from your company and it also eats away at cash flow. So just curious in terms of how, your folks are kind of solving for that.
Yeah, that's a great question. And I think that's even more heightened in this world where content is just like, it feels like we're in a content stream where just information is out there. So it's hard to decipher who's real and who's just here kind of bloviate, and pardon my French. But I think for me personally, so two of the things that I really try to lean in are one, network, right? So just like the founders that I've worked with, who are founders that you guys know, where are the spaces that really smart people are gathering virtually or in person, right? Who are some people that I should be connecting with, right? Always trying to kind of get a sense of like what's happening, and keeping my finger on the pulse through the people that I've already worked with and I've already backed, and kind of trust their judgment, right? And then two, I think for funders, right, if you're searching, right, and this is from the investor perspective, I think my answer is going to be the same to both entrepreneurs and funders. It's going to be a slightly different vantage point. There's no shortcuts. It's going to take work, right? And that's going to require um, mining the internet to see who's posting, and finding out like what's actually out there, right? Doing research and figuring out like where are the spaces that you think that your skill set and your network and resources will go the furthest, right? In a particular area if you're interested in there, and then trying to figure out who's building in those spaces and trying to connect with those folks there. And I think on the founder side, I think flipping that lens a little bit is um, I unfortunately I do think that you have to scour social media, right? But trying to figure out like who are the people that who are actually doing the work. One thing that I noticed on the entrepreneur side that I don't see happen as much that happens on the investor side is founders don't tend to diligence their investors or prospective investors as much as the investors diligence the founders. And what I mean by that is like if there's an investor that you're interested in talking to or you got connected to and you have a mutual connection, or a founder that's worked with this investor, you should ask them about about the investor, right? And getting a better sense of what they've done, who they are, what are they about. You should know them by their fruit. And I think it's hard to escape who you are and what you've done. And so I think that those are the things that I would lean on. Unfortunately, Taj alluded to this, and I think we're heading there. I think it's going to be an even more challenging environment, just broadly speaking. And so founders will have to get creative around, how do I sustain? I think the other thing, this might be a little controversial. I'll say this and then I'll shut up. But I also don't know that I would be necessarily searching for VCs, right? I would say focus on your product, focus on what you're building, and try to trust what you're doing to lead you to where you need to go. I know that that is that might seem like a very idealistic perspective when you're trying to make payroll, you're trying to hire somebody, you're trying to pay for resources so that you can keep developing. Um, but that's where I say you need to be creative, and the more time you spend speaking to people and fundraising, the less time you're focused on your product. And most people that you speak to are going to ask you about your product and your business anyways, right? And so kind of putting your head down, putting the work in, and figuring out how to be creative about what you're doing, right? There's a really cool story about two founders that I know, one I know personally, and they ended up purchasing a business in the space that they wanted to start a startup in. It was a barbershop, and now this company's worth nine figures, right? And so like thinking about like, and it was a long slog, right? It's a glamorous story today. Um it's chaos until it works, and when it works, you're a genius, right? But just thinking about how to be creative and sort of put your head down, and then using what you've built to lead you to the people that you will want to try to talk to anyways is to me, I think, the path that most founders should want to take versus seeking out investors that are gonna um buy into your vision or not.
Absolutely. Thank you so much, Edward. Appreciate that.
Yeah,
For
and
sure.
I'll join in to ask Dr. Parker or Reggie, as I know him, a question. And this is really relevant because Reggie has not only been a founder when we first met, but also a venture capitalist and opening up Green Power Ventures. Some of the other work he's done with his conference, the Acre Conference, that's been really widely known in the climate world, and even being the chairman of Freeman Green Bank there in Atlanta. So one of the things I want to know, Reggie, is that from a founder perspective and then putting your debt hat on, what happens when you are a founder, you're building this company, and of course the company has that impact, and the impact may be to create jobs and other things of that nature. But how do you balance that with the catalytic capital you may get from, say, a green bank, or say a CDFI or other type of instrument? How do you balance that with the VC or the PE model that's looking for scale and speed in deploying your technology? So can you talk a little bit about that from a founder standpoint, and then put your green bank or investor hat on and talk about it from that standpoint as well?
So from a founder perspective, we put together in GPV, Green Power Ventures, a program called Pilot to Profit. And what we wanted to do was grab people who are able to deliver a pilot and help them scale to profit by understanding customization, understanding the three customers that they have, one being the people who work for them, who are buying their future or the vision, the other being the investor who are buying future revenues, and the other one who are buying the widgets or the services that they were selling, and understanding how that process works, and in doing so, building workflows and things of that nature to accelerate. All of those learnings came, as Edward says, by hard knocks. As a founder, I learned all of these things, and a lot of the accelerators that I was seeing were not doing that. And this was a way of teaching entrepreneurs or founders how to be creative, how to stay alive, how to become attractive to investors and acquirers. Uh, and then once you understand you have something to sell, you can then go to the debt market for PO or invoice financing and those type of things, where you now have where a bank is able to fund a project or fund a different part of your business. They're not able to fund early on. They don't take those risks. What they want to do is fund the project, which actually accelerates workforce development and economic development after the business has grown. So looking at it in those types of hats, if I were a founder, I want to know, how do I get from idea to pilot? How do I get from pilot to profit? And when do I pull the banks in? When do I pull VC, angel, SBIR grants, local things? When can I be comfortable giving this accelerator 1%, 5%, 10% of my business so that I can get to the next step? How do I model all of that out so that I know that the WIFM is there? What's in it for me?
Yeah, I think as a follow-up to that, or Taj, I don't know if you wanted to, yeah, and just as a follow-up to that, because you have to be creative in financing, especially within this market, that changes up your cap table in so many different ways, right? With different incentives from either a VC firm, a PE firm, or from the bank, right? The ROIs for each particular entity or each particular group on the cap table could be wildly different. And so actually, Dr. Parker, I'd love to kind of go back, since you just answered this, based on the example that you shared. I guess what's the single most significant, maybe administrative or maybe operational challenge, that's created with having all of these different capital sources? And I guess how should founders be thinking about streamlining or reporting, or just even on the decision making, especially if you go on to continue to raise capital, right? And diluting, diluting, either your equity or what have you, in order to meet the needs of your investors who are coming from a variety of different capital stacks.
Bottom line, any type of capital you're going to get from an outside source, you need to think of them as institutional, and therefore your books matter. And that's usually one of the first things that founders let go. I mean, they're working in their business, not on their business, which is a problem, right? You always want to be working on your business, and that includes actually developing the product. You should not be everything in your business after a while, right? You should not be the salesperson and the executor and sending out invoices. Um, After a while, you should have been able to figure out how to grow the business. If you can sell the product, you can sell the vision. So, one of the things that I heard you ask me was, number one, what do you have to pay attention to? One is how to actually sell the product, and two, how do you document what's going on? So, your book are key. Protocols are also key, because that is what you give to somebody else to continue that work. Yes, everybody wants to talk to the founder, but no, everybody doesn't get a chance to, or else you burn out quick. So I'm hoping that resonates with some of the founders as well as with your question, because those are the things that I had to learn to, I said, look, I'm doing this for my kids and I'm going to kill myself and not see them. So something has to change.
Thank you. Taj, I don't know if you wanted to jump in there.
No, I think Reggie is the emphasis you gave is very, very important. And I think again, this is why it's important to have these conversations. And I think somebody put into the chat as well, is that we need more collaborations like this that are happening, given the drop in different type of federal funding that's out there and the scramble on the state side. But this definitely is a call to action to not only the private equity markets, the venture capital markets where Ed and I come from, but also the debt allocators, the CVCs and others, to really kind of jump into the fray. I'm glad this conversation is happening as well. So Sherrell, back to you.
Yeah, yeah, absolutely. I know we're starting to come up across time here, but I wanted us to get to this conversation of, beyond, unlocking the promise of capital resources, as well as this idea of more of an inclusive and a clean economy. I think to your point earlier, Taj, we talked about the value of the green job creation, right? The success of these companies, the funding of these companies leads to jobs, opportunities, new markets, new economic development across cities for people to be able to earn a living wage, feed their families. Edward, I'd love to actually toss this question over to you. So let's say a non-financial partner brings catalytic I'm so sorry, y'all. Catalytic capital. What are some of the non-monetary metrics when we think about workforce dev, job quality, community benefits all around, that a fund like yours might look for to really validate this impact equation, and be something that is still significant, for the deal that you would do with them?
Yeah, for sure. I think whenever and funny enough, this doesn't change too much for a financial or a non-financial partner. I think how I look at it changes a little bit, but one of the things that is just top of mind is alignment, right? Like, how do you see this as part of your greater mission, right? I think in the deals that I've done that have not worked out as I've hoped, right? I think that there's a misalignment in alignment amongst the folks that are um, supporting the companies and supporting the founders. So just first and foremost, like what's the end goal, right? What looks like success for you? What looks like success for myself? What looks like success for the founder or the team? And then I think the other thing is like a clear roadmap of like what this team and company needs to do to achieve that, right? And that'll vary depending on what stage you are in, right? We have a company that I was on the board of that really early on was in the supercapacitor space, and funny enough, actually worked with corporate who was not an investor, but as I had mentioned, helped. Um, Give this company guidance, but also committed to future POs if they were able to hit certain milestones, right? And so understanding like, hey, here's what the development of the product needs to look like. Here's how it would integrate with our vendor stack, right? Here's how it would look at scale, right? Here's all the certifications and quality assurances that we need, right? Um, Understanding a clear roadmap of what's required and hopefully working in tandem with the founders and the team to lay out how to get there is super important. And within that, right, the founder um, who the team actually was working with indigenous farmers, Black and indigenous farmers to source their material, right? Which led to community impact, right? For a segment of a market that's actually like widely ignored or underserved. And then also thinking about on that roadmap, who are the folks that need to be brought in to help bring this to fruition, right? So having to me alignment and then a clear sort of um, outcomes based sort of roadmap really helps founders understand, one, is this a partner that I should be partnering with? And then two, if we do decide, hey, to partner with this institution, with this corporate, with whoever the entity is, foundation, that we're all aligned and we all know where we're heading and we're all rowing in the same direction. And so I think that that's actually super key on the non-financial side, but candidly, I would apply the same lens to an investor if I was the founder and sort of ask those same questions.
Yeah. Ed, I want to thank you, and Reggie, I want to thank you as well. And Sherrell, also want to thank you and Impact Alpha for having this really wonderful conversation. But I want people in the audience and people online to know that it doesn't stop here in this panel. This panel is supposed to be catalytic for us to continue this conversation online under Impact Alpha, continue to have this conversation, and also put my information in the chat because we want to focus on creating a network that's going to have these conversations and actions from this for allocators to focus on investing with their type of capital at the intersection of impact, speed, and scale. So again, thank you all for joining us. Thank you, Impact Alpha, for highlighting this great conversation. And Sherrell, I want to take it to you to lead us out with this plugged in series and maybe talk about what's next.
Yes, absolutely. Thank you all for joining us, and for Taj and Edward and Reggie. Thank you. We, of course, could probably have a longer and extended conversation, and hopefully, as we look towards 2026, we can have further conversations on Plugged In, where we are talking about both climate and equity, because those two have to continue to go hand in hand to solve some of our most pressing issues. Please continue to stay tuned in to Plugged In. Every single month, we do a conversation with incredible founders, investors, and funders across the board. This is a space for us to continue to learn in this space and to see what resources and solutions are at the helm. And if you haven't already, if you're not already a subscriber to Impact Alpha, you all can get Impact Alpha Open delivered straight to your inbox. You just go to impactalpha.com/open. I'm sure someone from my team or our great producer Isaac may toss that into the chat for you to sign up. It's a free weekly newsletter. It's crisp, it's expert curated, investment briefing. It lifts up people, data, tools, trends, as well as job opportunities so that you can stay ahead of the curve. So again, that's impactalpha.com/open. Thank you everyone for joining us. The recording, I believe, will be available no later than I think that tomorrow. So if you either joined us late or you had to hop off early, you can still get access to this conversation. Thank you again. Have a wonderful day, everyone. Thanks again.